Hello, money magnets and master traders. Yesterday's aftermarket video, Uncle spoke about how the bulls are not showing that much strength here. We see in a decrease in volume. We're seeing choppy candles with the range getting smaller. But today was much better. You guys can see here on my volume indicator here, the bar is a little higher than yesterday. It's not the highest volume I ever seen on SPY, but it is a little higher than yesterday, so we're in a step in the right direction. And then we cleared that 1.236 Fibonacci level, which was it's technically at 600.25, but Uncle rounded to 600.4. Wrote it in the Discord this morning. Bulls must clear 600.4 to give us more upside, with 601.7 and 603 in play. If 599 fails, 597 and 595.5 in play. Be ready to react one setup at a time. When 600.4 cleared, I alerted to the group. 600.4 cleared, putting 601.7 and 603 in play. Now remember, with Uncle's strategy, you gotta play it level to level because you don't know what's gonna happen. Once the market hits a level, you don't know what's gonna happen. So when it cleared my 600.4 level right here, right there, it cleared. Boom! Look what happened after that. Well, not long. It took a little bit of time, but it did eventually hit my 601.7 level. That's what you call a level to level move, from one level to the next. That's why it's important to take profit. Boom, because look what happened after that. Rejected, had this big old long wick going all the way down to right around my 599 level. It never gave the bears their setup by breaking down that 599 level, by the way. Managed to avoid a breakdown intraday of the 600.4 level, not once but twice, and continue to push up each time. That 600.4 level was important because it was a fib level and we cleared it intraday. Overall, the market was bullish. Eventually, it did hit my 603 level intraday. Very nice move for the bulls. Now we need to talk about for tomorrow because anything can happen tomorrow. Right now, it is looking bullish. But as you guys know, with these catalysts, with these news, these data, the fights on Twitter, it causes the market to move and we don't really know what is going to happen. Just take a look at Tesla. It was dropping, amazing drop to the downside. And then the last couple of days, it's just been popping back to the upside. You see, that's why you can't trust the news too much. I look at them as just catalysts, a reason, an excuse for the market makers to do what they're going to do. Most important thing for us to pay attention to the levels. So tomorrow, we have CPI in the pre-market. So we can't really trade SPY. If you're trading options, you can't trade SPY, right? In the pre-market. You're trading shares, fine, but with options, with the SPY, not really. So we're gonna have to watch out for either a gap up or a gap down. And the context is important. Remember this: if it's bullish, right now we got a breakout of the 600.4 level. If you guys are holding calls or longs into CPI tomorrow, that is a big risk, but it is a reasonable risk because it's based off of a breakout and it closed just under the 1.382 fib level. And I tell you, if we gap up above 603, 605, 608, 609, 611 plus would all be my targets to the upside. Bottom line is, for me to be bullish, price must stay above 600.4 and keep today's breakout intact. Keep it intact. Now, if we gap down tomorrow or overall below 600.4, today's breakout would be invalidated or at least in trouble. It would be in question. It would be in jeopardy of being a false breakout setup, putting the trend line in play. The uptrend line is currently around 598, and I tell you, if we lose that level around 598, it's sloping up. It was at 597 yesterday, sloping up right around 598, and if that level is lost, it could get real nasty against the bulls and in favor of the bears. As usual, guys, you don't want to call a top. I know there are plenty of reasons to be bearish. When is there not a reason to be bearish? When? Tell me. When is there not a reason to be bearish? But we must follow the price action. This is the sheep style way. What is a sheep? A sheep is known to be a follower. Well, guess what? We're going to take what's usually known as a negative thing. We're going to turn it upside down and we're going to make it into a positive thing because in trading, we follow the price action. So when I say we are sheep style traders, it means we follow the price action unbiasedly. That also means we trade to the upside or to the downside. We're not bull biased, we're not bear biased. And if we are biased, it's because we're following the price action. Does that make sense? So basically what I'm saying is, if we stay above 600.4, overall bullish, and if we gap up or even just traditionally clear 603 and a 605 level, we are heading up high, possibly back up to all-time highs. And I will not get bearish unless we're below 600.4, 599, and like I said, the uptrend line sloping up to the 598 area. Where is the 5 DMA? And look at that, the 5 DMA is also right around the 598 area. So that's multiple reasons why that 598 level is important. And if it breaks down, that will be a victory for the bears. So remember, we trade both ways. Either way, it does not matter. SPY, up, down, we're going to follow it to the best of our abilities. And I gave you guys the levels and the setups, so hopefully you guys will be able to use it well tomorrow. Moving on to QQQ, it bounced off the 5 DMA, also bounced around that 528.5 and the 530 area that I have as support. We managed to clear the 1.68, the 1.618 fib level today. Good. Now, as long as above 533, I'm favoring we go test 535 and 536.7. Those are fib levels. Well, 536.7 is a fib level. So with help from CPI, if we hit those levels and clear it, we're most likely heading back up to 540 plus. If we gap down from CPI or break down support levels, starting with 531.7, 530, 528.5, and 527. Those levels must break down. It'll break down the trend line, the 5 DMA, and critical fib levels. If we gap below those levels, thanks to CPI, or even just break it down regular, I would be bearish. And below 527, I would be bear bias, at least until 523, 519.2, or lower. Here is NVDA, bouncing off my yellow trend line, also right around where my 5 DMA is as well. Bulls are still looking alive. Can they stay alive tomorrow with CPI? If we're above 144 and 145.6, the answer is the bulls are still alive. 147, 150 plus is incoming. Now, if we gap down or break down 142.5 and 141.5, we are bearish. 140, 138 or lower incoming. I would expect about a $10 to $15 move to the downside. Here is Tesla. Some way, somehow managed to recapture the megaphone pattern. We rejected the megaphone pattern last Thursday. Today, recapture. That level for tomorrow is around 320, 320.5. That's also a fib level. Amazing. So as long as above 320.5, Uncle Charters recommends you guys to stay bullish. You guys could be looking along, looking for those bullish setups, but above 320.5, I recommend staying bullish. Next resistance I have is at 326, 328, 330, and 331.5. That is a fib level. If those levels clear, especially 330.5, that's a fib level, and it also happens to be a gap fill level. If that level recaptures, I would expect a lot more upside with Tesla. This stock is volatile, so it's not really beginner friendly. So just be careful if you decide to trade it. Now, like I said, if you want to get bearish, 320.5 must fail. I do have support at 324, 322, and 320.5. If those levels fail, that's when I would recommend looking to short. And the bounces we had the last couple of days could possibly be a dead cat bounce. But the main level I'll be watching is 320.5. Bearish below it, still overall bullish above it. Here is coin. We have the third test of this downtrend line, a descending triangle pattern. I turned one of my fib levels into yellow, like that 239 level. Buy zone had about 3 tests around that area as a buy zone, and we had bounces. And we also had 3 tests of this downtrend line, looking like a descending triangle pattern. So overall coin is still in the chop phase. What is the range? Well, based on this structure, 260 is the top, 239 is the bottom. That is a pretty wide range, 239 to 260. So we can trade this either way. Below 257.5, I recommend staying bearish. 256 well, actually, we're below 256 now that I look at it. Well, the next support's at 254. Below that's 252, 250, 248, and the fib level at 246.7. Now, if those levels fail, that would be bearish. 245, 243, 241, and the bottom of the descending triangle pattern at 239 in play. Now, if we are looking for the next trend move, a swing tradable move, 260 down to 239 is the chart range. It will get tighter as the days progress, but if we break that range, that is when you want to swing trade. And I would expect a 10 to 20 plus dollar move once that range breaks. Now, here's the VIX. Didn't cover it yesterday, but today we did once again close below that 17 level. Fib level at 17. As long as below, there's a good chance we go back down to 15 or lower. Can't get bullish on the VIX unless 19 and 20.4 can recapture. And a bullish VIX is usually a bearish SPY, and a bearish VIX is usually a bullish SPY. All right? Stay sheepish, stay magnetic to the money, to the love, and to the blessings. Peace.